Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott at Manchester. My name's Matthew Taylor.
And I'm Katie Allan. Welcome to the Ledger Lounge.
So here we are again for the latest episode of the Ledger Lounge. So what's been happening since the last episode?
You've been on holiday.
Oh, yeah. Yes, it feels like a long time ago, that as well, because I think I've been in 4 days now and I feel like I've done about 2 weeks working.
Yeah.
It's been completely non-stop.
Mad rush.
Yeah, so we're moving the offices on. So a bit of project management there as well as doing my day job.
Yeah.
But they're looking good, aren't they?
That's what I said the other day, didn't I? Now you're a project manager.
Aye, yes. Yeah.
Trying to arrange everybody.
Yeah. And then awards season seems to be on us as well. So Xero have just announced their awards that we got through to the final of last year.
Oh, have they announced it now?
Yes, they've just announced this
week year.
For the 2025 awards. So I think we'll be having another go at that and see whether we can improve on our finalist place and hopefully go for a win.
Hopefully be on that stage.
After the Xero Awards, there's the Oldham Business Awards. So they were launched. And I think now we are an Oldham Business.
They're annually, aren't they, Oldham Business Awards every year?
Yeah. We went about...
we went...
10 years ago.
A long time ago.
A long time ago, yeah. Yeah. So I think now we're an Oldham Business, we'll have a go at that. So while I was in the US, bumped into a guy who works for OpenAI who are developing ChatGPT. And it was really interesting to talk to him about where they see it going to be in the next 5 years and its capabilities. We're already seeing it come into the accounting space.
Everywhere as well, isn't it? Everything seems to be run with AI at the minute.
Yeah. Well, I listened to one podcast the other week and and I think it said, the answer's AI, now what's the question?
Yeah.
And I think that's very true at the moment. I think we've got a little bit of it using a robotic process automation, which is an AI-driven bot that helps us with our accounting work.
Needed a bit of training at first, didn't it? But it's working now. It's, well, like with anything, it needs telling what to do.
Yeah.
It does it.
Yeah, it's getting better all the time.
Yeah.
So that's really interesting. And then I was reading this week about a tax planning AI-based tool which will help us deliver timely tax advice.
So we just put into a system what we want to tell a client, and it'll come up with but tailored to that client as well. So it will link in with their tax returns or with their accounts. Yeah, that'll be interesting as well. All of these things are coming into the space, which are going to be really interesting to see where it goes. I still wouldn't get into a driverless taxi though.
Well, these guys they lived in San Francisco and they got what they call an autonomous vehicle, and it was a bit like ordering an Uber, but this car turns up with no driver, and you tell it where to go, and off it goes. Takes you there. Very strange. Yeah, I think there's a bit of confidence needed before you can get in that.
I'd be like that with my foot all the time. Stop.
Yeah, true. Yeah, and I suppose we're coming towards the end of the tax year now as well.
Yes. Tax planning. Yeah.
So where can we, what can you do to reduce your tax liability and maximise your allowances? Everybody has personal allowance, so you really need to be making sure that your income, you've utilised all of that.
Yeah, but also if you've not tax planned, then they get a shock, and then they do in the future then tend to plan for tax.
Yes, yeah.
I.e., they either bring the things to us earlier or they ask us questions earlier than afterwards. And they're like, oh, how can I reduce my tax bill? Well, it's already done. Yeah,
so getting ahead.
The date's already been and gone.
Getting ahead of the game before the tax year end. So if you've got the opportunity to make any pension contributions.
We've got AI doing general bookkeeping for us at work. We then have more time to actually look at clients and tax plan for them. Mm-hmm. Yeah. If the bookkeeping and day-to-day stuff can be done. Yeah,
take the mundane out of the process. It leaves us more time for advisory.
We can look at the figures and say, right, we predict this, i.e. put money into a pension, ISAs.
Yes.
This is what you can do to reduce your tax bill.
Yeah.
Should you want to do it, and if they don't want to do it, then pay the tax bill.
Yeah, I think ISAs is a really important one because interest rates are now back to where they probably should be after 10 years of very, very low interest rates due to the 2008 crash and then the COVID issues. Interest rates were very low. So now they're coming up. So people's savings, and we've noticed it this year, haven't we, when we've been doing tax returns, that people's savings have increased again.
Yes, and I think they've been caught out a little bit as well because they've had a lot of interest on those savings, and probably throughout the year when they got the statements have been, oh, wow, I've made a lot of money in interest on this, but then not thought, I'm going to have to pay tax on that.
Yeah, and I think before the rates went low, I think banks automatically deducted tax from their interest.
Yeah.
So now they're getting it gross, so there's a tax bill. But I think the important thing is if you've got interest and you're paying tax on it, look at your ISA. Use your ISA limit so you can put £20,000 into an ISA every year. Up to £20,000. Yeah, it would be nice, wouldn't it? And make sure you don't pay any tax on it.
Yeah, it's not that they're not paying tax, they're just utilising, put that money elsewhere.
Yeah. And these lifetime ISAs are very good as well. Somebody at work's just buying a house and he's been saving up in a lifetime ISA and you're allowed to put, is it £4,000 a year into one?
Yeah, and then when you then request it back, is it for a house or?
Yeah, it's for a house, yeah.
When he requests it back, it goes through the government and then they
top it up with, I think, another £1,000 for every £4,000. So it's a good return on your money.
It's better than putting £4,000 in just a savings account.
Yeah. So, that's using those allowances. Pension contributions has the benefit as well. If you're at the cusp of higher rate earnings and you're going to pay 40% tax, making a pension contribution can increase your band so that you still pay tax at 20%. Effectively pay tax at 20%.
Which is what my partner didn't listen to me on for, 2 years, was it? Do this. Yeah, I will do. And then after the 5th of April, your tax bills come through, I forgot to do it. He does it now.
Yeah,
he does it now.
You got through to him in the end. You say.
Yeah, eventually.
And that's free advice he's got. Our clients are paying for our advice.
Can you make sure I'm on there as a beneficiary though?
Yeah. And then I suppose at the upper rate, if you get to £100,000 of earnings, above that, you start to lose your personal allowances. So again, a little bit of pension contribution planning.
Can increase that band.
Gift aid donation into charities.
Yeah.
That can increase that and reduce that tax burden then, because it's a bit of an odd tax band, that abatement of your allowances.
It almost seems a little bit unfair as well, like with you've got to this, but then now you've just lost all your allowance.
Yes.
Yeah. It's a bit unfair.
Yeah.
Well, I think it is personally anyway, but HMRC don't.
A lot of what we're talking about today is available on our website, jamescott.com, where we've got a year-end tax guide, which has a lot more information, and you can download that for free. If you need any further advice from that, give us a ring. Drop us an email, go through the contact page, or I think we've got a Calendly link on there. You can book a call on there. So that's all available on there.
It's a bit more in depth, isn't it?
Yes, I think it runs to about 40 pages.
About it today, yeah.
So there's a lot of stuff in there. Pensions, inheritance tax, capital gains tax. I mean, if you're lucky enough to have a share portfolio, you can sell those shares before the 5th of April and utilise your tax-free allowance there, which is reducing every year. So make sure you use it.
It's always nice to save tax than pay it, isn't it?
I always think paying tax is important because we need it to focus for the
No, but
society.
It's nice to be able to utilise it for yourself as an individual.
Yeah.
If you pay money into a pension, you're not losing that money, you're going to gain it. It's going to grow until you get to pensionable age. And
I know.
Woo.
Great, yeah. It's happening.
If you listen to your accountant and do that.
Yeah.
So everybody with a child in the UK gets child benefit. Yes. Everyone's eligible for it. If you then earn over £60,000, is it for every £1,000 over that you pay £1 back?
For every every £2 over,
every
you pay
£2 over,
£1 back.
Of which some people are unaware of that. Another thing with this is, I only come across this the other week. Somebody could live with somebody who's claiming child benefit, i.e. a lady meets somebody, moves in with that man who's got no children, but she's got 2 or 3. He's a higher rate taxpayer and he has to pay it back even though they're not his children.
Yeah. Yep. the higher earner.
But there's a lot of things that people won't know or ever come across until it happens to somebody that they know.
Yes.
And a discussion's then had.
Yeah.
Curtis wasn't aware of it.
Yeah.
I should have been aware of it, but
it is an odd one that...
Don't tell him.
It is an odd... Well, I say an odd one. There are some vagaries with that whole child benefit thing.
Yeah.
But,
you can opt out.
Yeah, some people look at it as an interest-free loan from the government and I'm going to pay it back 18 months later.
Yeah.
With my tax bill. Other people just think I can't be bothered with that. So I was with a client yesterday who we had the conversation with him about that, and his wife's expecting, I think it's due in July. So it was we were almost planning that element of it there in a conversation with the client to say, you've got choices. You either take it and it's an interest-free loan, or look at it that way, and then you end up paying it back, or just don't take it.
Yeah.
So, and I think he's going to opt to not take it just because.
Yeah, sometimes for some people it's not necessarily worth it, is it? If they've got the mindset of, well, I've got to pay it back anyway, so I'll just rather not have it.
Yeah, that's right. Yeah, because I think it can be a couple of £1,000s by the end of.
I did wonder after that though how many people have been caught out with somebody else is living with them claiming it.
Yeah, a bit of a shock.
But then also if they don't let their accountant know, or if they file their own tax return, then they won't know to include that. So there's probably a lot of people not knowing that they're doing that.
Yeah.
Sorry, HMRC. You don't grow up knowing accountancy, knowing tax, knowing when you pay it. What advice would you give to somebody, your younger self or teachers from school, how you plan?
Yeah, I think that if you were starting out in business, talking to an accountant right from the word go is really important, because they can help you with understanding the dates payments are due, the little elements like we were just talking about child benefit that can impact depending on the level of your earnings. And again, just having that conversation early with an accountant is really important.
I think we've seen it in the past as well, where somebody's started up the business on their own, not really thought about an accountant until they've thought, oh, I need an accountant. And then they have all these questions, but again, going back to tax planning, it's already too late. You've already passed the 5th of April, or you've already, your accounts are due, but you've only just got an accountant on board and they've got to learn your whole business within a month of the deadline. But you're not really learning the business, you're just trying to get the job done, and then you're not actually thinking about how you can help them. So I do think it should be spoken a lot more about I know when I went to school, you had an hour on a Wednesday in form where it was not a lesson. You just sat there and had a chat with your mates before assembly. They could use it to, I know they can't talk about politics, but they could certainly teach children how to, not save, but how to pay bills.
Yeah.
Save.
Life
it's not
skills,
just about accounts and HMRC, it's all about life. Because they expect them to leave school and know what they want to do for the rest of their life.
Yeah. I think there's probably something that they could do in schools.
Parents as well, parents probably don't really think to teach the children how to. You don't always think your children's going to have their own business, so you won't say, oh, by the way, you need an accountant before you start your business up.
No. But one thing that was really interesting that the Oldham Business Awards launch was that Oldham is a really good place to start a business, which I was quite impressed with. I think that there must be an entrepreneurial spirit, and Oldham's always had a go-getter attitude. I think it's been the first in a lot of places. I mean, my wife calls it the centre of the universe.
Really?
And being a better place to start a business in Oldham, getting that right advice. So if you're in Oldham, you probably, if it's a better place to start a business, you've probably got a better chance of success in Oldham. So planning the business, getting advice
it right
early,
from the
because
beginning.
Getting it wrong
is
as
key.
well is also we talk. We've focused a lot on tax planning, but actually, getting things wrong can also have negative consequences. So that's also
and I think
good to be avoided.
Just touching on that, when people have gotten things wrong, they tend to bury their head in the sand and just don't think of the implications of what they have or haven't done. They just try and avoid it. Push it further down the road. I'll deal with it later on.
Yeah.
And then penalties. And
if you miss your tax return, you've got a penalty. If you don't pay your tax, you get interest. All of these things mount up. VAT, if you're VAT registered and you've got a big enough business to be VAT registered, so you're turning over 90,000 or more, then that, again, miss your VAT return deadlines and don't pay that.
It's a different system now, isn't it?
Yeah,
as well, it's point system.
Yes.
Whereas it used to be a penalty straight away, didn't it? Now you get like a dot next to your name.
Yeah, so I think when self-assessment first came in, you won't remember, but there was a little inspector, man called Hector the Inspector, and a little strap line. I think it was tax doesn't have to be taxing.
Right.
And I think they also at the same time did a tax simplification process at the government, which after they did that, I think the tax legislation went from a book about 4 inches thick to a book to 3 books 4 inches thick. So how they call that simplification, I'm sure they didn't use...
Do you think that they brought it out originally for people to assess their own income? They don't need an accountant then. They can just do it themselves. It's simple. And then over the years, it's just got more complex. That's why people need accountants to do it.
No, the cynic in me says they outsourced all of the work that the Inland Revenue were doing, whereas they used to raise the assessments and then they called it self-assessment, so that you tell them how much you think you should pay, and then we're going to fine you if you get it wrong. Yeah. So this is where we come in, I suppose, that having a knowledge of the tax system and the tax laws makes that. Yeah.
I bet there's many people as well that have, from the beginning, have just done their own from when it first started. They might be doing it right, but they might not know that they're doing it wrong still now.
Yeah.
If they've just done it every year on year, oh yeah, I know what I'm doing, but I haven't thought about interest on savings or anything else that might crop up.
I've spoken to many people who say, I don't need an accountant. I've done it myself. Who knows whether they, have they...
Under or overpaid.
Yeah, we have to do our, what we call our continuing professional development to make sure that we're on top of tax law as well as accounting.
Any changes.
And changes, VAT. And it is complex.
That's probably why they're bringing in MTD for it, so aren't they? So,
yes.
It's done more regular. HMRC, well, I think it's more for budgets as well, isn't it, for them, that they know they've got more of a guide on what tax is going to be coming in.
Yes. I think that touching on MTD for it, so there is interesting. So that's coming in April 2026.
Which again, I mean, you used to see loads of adverts on the telly and on the radio and about any changes with HMRC, and there's not much.
No,
there is for us, we get emails, but there's not much for individuals who are self-employed.
I think they're relying on
they probably don't know what it is
a little bit to communicate this to our clients. So if you're business income over 50,000, and that can include rental income as well, then you're going to have to file quarterly returns instead of an annual tax return. So that's going to be a big change in April 26. We're just going through the preliminaries of
how we're going
to approach it, how we're going to communicate that to the clients. Because
we've been doing it for a while. On the clients that we currently have, we do it now without unknowingly for their accounts. So it won't be a massive jump for us to be doing it for individuals. It'll be training them.
Yes.
To i.e. Dext 0.
Yes. Yeah, I think we understand it as a practice.
Yeah.
We understand the concept of digital record keeping.
Yeah, and we've had MTD for VAT for, I want to say, like 7 years now.
Probably, yeah. Probably 2016, 2017.
Yeah. I think it also aids tax planning as well. If you're doing it quarterly and it's more real time, we can then, because we have to report quarterly.
Yeah.
In the last quarter or in the second quarter, we could have that discussion with them to say, right, this is where it's going. We advise that to save tax or to do this, pension contributions or whatever that may be, that's relevant to that client.
Yeah.
Or then we know that actually they've not earned as much this year, so we can reduce that payment on account.
Yes.
For the following year. It's both ways.
Yeah. Yeah. So it can be a really good planning tool as well. I think the challenge is going to come, from our point of view, is educating clients and getting them to understand that this needs to be done on a quarterly basis because there is a penalty regime that backs it up.
Yeah.
But it will be a really good way of being on top of your business, knowing how much you earn. If you are running a business can I make tweaks to my business that will improve the results? Am I spending too much money on materials, or am I spending too much money?
Yeah, where can I save, or also where can I spend sometimes with some people, isn't it? What can I spend money on, or what do I need to save money on? Yeah. They'll look at the figures a lot more, not in depth, but they'll be able to see that, won't they, from the reports that they currently get reports now, but the reports that they'll be getting them in regards to their self-assessment, not just the business, which is good, because I think some people fob off the self-assessment. They've dealt with the business all year. They're not bothered about themselves.
Yeah. So I guess common questions that we get asked at this time of year, or if you're a business, if you're a limited company, before the company year end, which can be any time during the year, is probably, how can I reduce my tax bill? What can I do to reduce my tax bill? We've got things like capital expenditure. If you need to buy some equipment,
do it in the year, don't do it afterwards.
Yeah.
Which again goes back to planning as well. If they wait till we send them the corporation tax return and say, what can I do to reduce it? Well, it actually relates to 9 months ago. So you can't.
If you've got expenditure that you are going to spend in the early part of the next tax year, can you afford to accelerate it? Can you bring it forward? Can you do it before the year end?
Or do you buy a van? Do you lease a van? Like, what's the best approach on that? So, a lot of tradesmen always ask us that, don't they? Like, should I buy a van, or should I
a regular
lease
question,
it?
That one. Yeah.
Usually, again, on the 31st of the month of the year, and get one now, get one today.
Again, it's all about planning. It's all about having those conversations before year end.
Yeah.
And not waiting until
and as well with us, just
late.
speaking to the client and, I've noticed this, and did you know you could do this? Or I can't really think of a scenario, but there has been times where we've had to approach the client and say, we've noticed, I don't know, cash drawn, what's it for? Oh yeah, I forgot to put the receipts in, but if we hadn't asked that question, it would have just sat on a bank account as cash drawn, probably to their drawings, and they've paid tax on it, but it's actually for, I don't know, tea and coffee, or wardrobes for the office, or whatever they've bought from wherever in cash.
And I think that links in really well to what we were talking about AI earlier, that taking the mundane out of the business.
We can look
means
at it.
We've got time to look at these things and spot them that you may have missed. You may not have missed it, but you may have missed it. Ask the client the question and then advise them.
Yeah, and also not bombarding them with questions after the event, after the year end with, can you explain? Can you provide this? Can you do this? Can you do that? They probably read an email and think, oh, I don't know what that was for 9 months ago. But if we're looking at it monthly or quarterly, they'll remember more.
Yeah.
Or provide more. And eventually, we won't need to ask them. They'll think, I need to tell the accountant about that.
Yes. Yeah. Education.
Yeah.
Comes back education.
Which we've seen it with many clients now. With MTD for VAT, they do provide information quite regular. Whereas it used to be a box every 3 months that, here's my stuff, see you later.
Yeah, I think that and our adoption of the technology has improved the way we can work with clients.
Yeah, it's real time. Yeah, it's more real time, isn't it? Rather than reporting something that happened 3 months ago and telling them what they've got to pay in VAT on the 7th of the month, or when it's due today.
From that, you can also then do on a quarterly basis, say, management accounts and talk to them about how the business is going and have a conversation with them.
Yeah.
On this is where you're at.
And we've mentioned it as well at work. When somebody's mortgage is due, obviously they then do contact us. They need 3 years worth of SA 302s, tax returns. We could do with knowing when clients' mortgages are due for renewal. So we're aware that, we need to pull that job forward.
Yeah.
The mortgage is due in November or whenever it might be, which also looks good. That we've been planning for them without them knowing that we're planning for them. We've already sent it to you.
Yeah.
There you go.
Yeah.
We know your mortgage is due in November.
Yeah, I think that's important as well. I think capturing mortgage dates, because there's nothing worse than not having the information to provide to a mortgage company, and that causes stress for people if they can't get their mortgage arranged quickly.
Yeah, but I also think that's, again, us training the client, because we've had it before, haven't we, where clients have already had the meeting with the financial advisor, the mortgage advisor. We find out on the last day of that month that they need the reports, So it should be us first saying, oh, by the way, your mortgage is due.
Yeah.
And then they might say, oh, yeah, I've got a meeting with my mortgage advisor next month that I didn't tell you about.
Yeah, so little prompts in our systems.
We prompt them to look into it. Some people probably forget that the mortgage is due for renewal in 9 months' time.
Well, I hope this chat's been useful and the podcast's been useful. We've given a little bit of free advice, which is always useful and always nice to have. It's not just about going and talking to James Scott for your business advice. If you want to, make sure you talk to your own accountant, get that advice. But look out for our socials, Instagram at James Scott CCA.
Yeah.
Our website is www.jamescott.com, where there's tons of publications and information on there that will help you.
I should probably look at that as well. More often I just go meet the team. Oh, there I am.
The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor and Katie Allan. For more information, visit jamesscott.com. This podcast is recorded at and produced by KUPOD Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.